Hi, in this video we're going to work exercise 9-9A. We've already worked part A. If you haven't seen that video, please watch it. We're going to, if you need to. And then B, we're going to work B in this video. So we're asked to calculate the balance and retained earnings as of December 31st. Well, we've already discussed that there's question marks that they don't give us the numbers for. And in this problem, or this video, we're going to calculate retained earnings. Okay, so we're given some ratios that we'll need to use in calculating this. First off, we know that the total of liabilities and stockholders' equity equal $518,400. So we can determine, really, believe it or not, we can calculate that what common stock and retained earnings are, what total equity is. We certainly can do that. And how we'll do that is we'll use this ratio, total liabilities divided by total equity, because we know that that is 0.8. So let's get to work. I'll show you how to do that. So like I just said, we know that the liabilities plus stockholders' equity equals $518,400. We talked about that in a prior video, and you know that assets equal total liabilities and stockholders' equity. So, problem is, and you guys know this because you were good at math, we have two variables here. What we need to do is get one variable, and then we can solve for equity. This is how we're going to do it. We know that, let me flip back over to the book. We know that total liabilities divided by stockholders' equity equals 0.8. And that's how we're going to do it. So let's rewrite that. And when we write equations this way in math, so total liability divided by, that doesn't do anything for me. But when I write it this way, I guess that's just how I was taught to do fractions. I don't know. Maybe it goes back that far, elementary school. I don't know. But it makes more sense when I do it that way. Instead of 80%, we'll put it in decimal. That makes sense. Total liabilities divided by total stockholders' equity. So what? And then, that's over 1, obviously, right? So we've got, and I'm just going to, instead of doing TSC, I'm just going to do SC. So we know that SC, you know what? I don't want to do it that way. Let me clean up my mess, and then let's go back. All right, so we got 0.8 SC right here, and then equals TL. So total liability, or we can just have plain liability if we wanted to, equals 0.8 stockholders' equity equals L. And that's all we've done is rewrite that equation that was given to us in the problem. But now we have a value for L, for liability, right here that has SC. So now we can have the same variable. So instead of saying L, we'll put 0.8 SC instead of L, plus SC equals 518,400. We combine these two variables and we have 1, because it's assumed that SC has a 1 in front of it, right? 1.8 SC, and I'm going to do 1.80 to stay consistent with the 0.80. Equals 518,400. And when we solve for SC, we have 288,00. Almost done, but SC is made up of common stock and retained earnings. Sadly for us in this problem, and I guess the authors of the book wanted us to discuss what's fixing to happen, it bothers me, right? So I'll talk about it. I guess that's the reason it's supposed to be done that way. But we're going to get a negative number for retained earnings. All right. So that triggers a lot of issues for bookkeeping, and also I had to calculate it. 72, but it's a negative. All right. If your retained earnings is in negative amounts, and this isn't a tax class, so I'm just going to say there's a tax implication for the stockholders and for the company, and then also for the company, as far as bookkeeping goes, they have ran into some other issues. And I'm trying not to get this into too far out of the way, but it's not a good scenario. You do not want this to happen. Let's just say that. We'll leave it there. All right, so that means it's a negative 72 that goes for retained earnings. Okay, and I'll look over the course material and see if we need to get into it. But generally, we don't want our retained earnings to go negative, because that means we've not only had losses or dividends that exceed what's been retained as profit and additional, you retained as profit over time, but we're really just eating into what people have invested technically into the common stock, because between these two, it's not 360 plus retained earnings. It's actually less than what people have invested. So we've actually returned, if we paid out a lot of dividends, returned what people have invested, which is a tax issue, company issue. And then also, it could be losses, right? So the company's just got a lot of accumulated losses and is not doing very well. And now they've got a negative retained earnings. All right. So that is part B. We've done it. We did it in less than 7 minutes. If you need anything else, please email me. And if you need any help with your homework, please email me and let me know.